The Canada Revenue Agency slowed down their collection efforts when the pandemic started. Is CRA going to ramp them back up? The panel has assembled and we'll discuss it starting right now.
This is Debt Free in 30. Here's your host, Doug Hoyes.
The panel is here. Scott Schaefer, Ian Martin, they're both CPAs and licensed insolvency trustees, and they both work here in the Hoyes Michaelis head office in Kitchener, Ontario, which is where we are today. And they both spend a lot of time dealing with tax issues for our clients. So, gentlemen, welcome back. I want to talk about taxes because historically, about a third of our clients owe money on taxes when they file a consumer proposal or a bankruptcy with Hoyes Michaelis. Last year, in 2021, that number had gone up to 40%. So obviously, it's a big problem. So Scott, I'm going to start with you. Why is it that so many of our clients have tax debts?
Well, one of the reasons was the CERB benefit, the emergency benefits the government put in play in 2020 was taxable income, but they didn't have any tax withholdings. For a lot of Canadians, 2020 was a year that they actually had incurred a tax debt because they relied on these benefits to get by, then they did their taxes, and lo and behold, they had a tax obligation because they didn't have enough taxes withholdings. Now we're fast forward a year and a bit, people are now being reassessed for collecting some of that money that they weren't entitled to, whether it was a small amount of it or a large portion of it. People are owing overpayments now in CERB benefits. So it was kind of a twofold thing. People owed taxes from the income they earned, and some now are owing it back to them.
So, Ian, if I file a bankruptcy or a consumer proposal and I owe money on CERB, and I'm not talking about the taxes I owe on CERB. So the first thing Scott said was, right, I got paid $10,000 in CERB. I have to pay tax on the $10,000. We understand that taxes are included in a bankruptcy. No issues there. But the second component, I got CERB and it turns out, oh, guess what? I wasn't entitled.
Right,
wasn't entitled to it. I didn't meet the criteria, whatever. So now I have to pay all of it back. If I go bankrupt, is that debt dischargeable in a bankruptcy or consumer proposal?
Right, and that's a great question, Doug. It's been a bit of an uncertainty in our world, and we're sitting here in spring of 2022, so we're going back, 2 years ago when people started receiving this money. The simple answer is yes. Here's a little bit more detail. So simple answer is yes, it would be included. I don't know if our listeners recall, but I mean, back in December of 2020, there was like hundreds of thousands of letters that went out to Canadians that really scared a lot of people. It said, this is the government saying, we've reviewed our records and we think that you might not have been entitled to this benefit. And you really should repay it if you know that you're one of these people. So that's going back almost a year and a half that people were kind of living in fear. Well, thankfully the government has come out with a very clear statement in the last little bit that says, yes, if you go bankrupt, this is a provable claim that would be included. And also it's important about the date. So it's not, as Scott had mentioned, that people are just now starting to receive these reassessments, right? So they're following through on that thread. So the relevant date, without getting too technical, isn't when the reassessment gets issued, it's when you received the money. So now that those COVID benefits are done, even if the government hasn't reassessed you and you file a bankruptcy or proposal now, it would clearly be included.
And that's a key point because an insolvency includes whatever debts you have at that date, whether you know about them or not.
Right.
So if I don't find out until 6 months later that I owed money on a library card that I forgot to pay, well, it's still included. Taxes, obviously, you may not know how much you owe until you actually file your taxes.
Right.
But if you owed taxes for 2021, even though you haven't filed your taxes yet, it's still included. So,
okay. Well, if I can add something, Doug, because I guess in a way what we're getting at is, there is, within the insolvency legislation, there are some debts that are not covered or not cleared or not included in a bankruptcy or a proposal. And this is something that we do encounter from time to time. There are some specific inclusions. And one of those, I said specific, but it's kind of general in wording. It would be debt that was incurred as a result of some kind of misrepresentation. So that would be the concern that we've had for the last, year and a bit. Will the government take the stance that, you knew that you weren't eligible for this, you received the money anyway, and because of that, that's why that debt won't be included. But it seems like they've taken the position that they're not going to press that issue.
Yeah, and we as licensed insolvency trustees received communication from the superintendent of bankruptcy herself, which said exactly what you just said, that this is a debt that does go away in a bankruptcy. Now, it hasn't been tested in the courts.
Right.
So we have to assume that one arm of the federal government, which is what the Office of the Superintendent of Bankruptcy is in sync with CRA and CERB and Canada and everybody else. But as of middle of April 2022, we believe that if you had a CERB overpayment and end up filing a bankruptcy or proposal, it is included. That's what we know as of today. Now, my question was originally, why do people end up owing taxes? So Scott said, well, there was CERB. That's a big one. What are the other issues? I'll throw this one to you, Ian. Why do people owe taxes just any year, not just this year, other than CERB?
Right. So I think the CERB comment, that explains why there was like a higher percentage last year. But there's always been a handful of reasons why people owe money on their taxes. It could be that you were out of work, or just reduced income, and you started pulling money out of your RRSPs just to get by, not enough tax deducted. The most common example would be somebody who is self-employed, so there is no tax being deducted at source. We're employees. I have my T4. You take a big chunk off my paycheck every year.
I don't take it. I take it and give it to the government. But yes, I understand. I understand what you're saying.
Right.
Yeah.
Right. So it's very hard for an employee to get significantly behind in their taxes. But if you're working as a contractor or subcontractor, you're getting paid this money, no tax being deducted. So you need to be putting money aside to pay your taxes at the end of the year.
Yeah. Now, you raise the issue of an employee. So, Scott, Ian's right. If you're an employee, your employer is required to take, CPP, EI taxes off. So usually at the end of the year, you don't end up owing money. However, we have a lot of clients who are employees who do owe taxes. So what went wrong? How does that happen?
Quite often people pick up a part-time job or a second-time job for two reasons. One is they're trying to pay down their bills or their debts, and they just don't have enough income coming in, so they take on a part-time job, or they can't get enough full-time hours, so they take on, sometimes 2, 3, 4 jobs. Well, when you compile that, there's going to be two reasons why you would owe more taxes on working multiple jobs. One is it might push into a second tax level, but in general, the tax program won't take enough taxes off a pay stub for the first portion, because there's an exempt amount that you're allowed to receive tax-free every year. Both jobs assume you're receiving that. So by nature, you're going to owe taxes because they didn't withhold enough taxes, just the way that the payroll software has it, if you don't tell the new employer, the second job, that you have another job out there. So it's a little bit complicated, but enough tax is not being withheld when you work two jobs.
Yeah, and the first piece I understand, I'm in the 20% tax bracket at the first job, 20% tax bracket at the second job, but when you add them together, now I'm in the 30% tax bracket, but everyone took 20% off, so I owe more. But your comment about the base amount I'm allowed to earn, in ballpark numbers, how much is that? Is it like 10 grand or something?
Yeah, well, it's around $13,000, and you figure the lowest tax bracket's 20%. So if somebody makes more than $13,000 on both jobs, the one job didn't have enough tax taken off, so you're going to owe the 20% of that.
In theory, I could work two jobs and make $10,000 at each job, and they wouldn't take any tax.
Right. Well, that's what I was going to say, Doug. That the common scenario is that people have their main job, that may be some full-time hours, but it's enough that there's enough tax being deducted from that. But then the second job, it's not a lot of hours. So when that employer is forecasting over the year, they're thinking that the total for the year will stay under the exemption amount that Scott's talking about. So they take literally no tax off. So maybe your real tax rate is like 20%, 25%, 30%, but that second job has zero coming off of it.
Well, and there's one other scenario I see all the time, maybe not all the time, but not uncommon. I retire partway through the year. So I had a job, I was, having taxes taken off, and then I start getting CPP or my pension. How would that muck things up?
Same thing. Unless you request CPP and old age to withhold taxes for you, because once again, the amount you're receiving may be under that exempt amount, they're not going to withhold it. So all of a sudden now, once again, you're receiving money without taxes coming off at source. The way we talked about the CERB benefit being paid, those COVID emergency benefits, the way we're talking about having a second job and not telling them about the other income, pensions are very similar. So if you don't have any taxes withheld at source, chances are you're going to owe more money at the end of the year.
Right. And you don't find out until March or April when you do your tax return.
And pensioners are one of the ones at risk, because sometimes for the first time ever, they've never had a tax debt in their life, and now they receive their very first tax debt when they file their taxes as a pensioner.
Now, we always do practical advice at the end, but I'm just going to skip over to it right now. So if I am in that situation where I have multiple sources of income, because that's really what gets you into trouble, right?
Correct.
I've got a couple of jobs, a job and a part-time job. I drive Uber on the side. I do skip the dishes, or I got a pension that started during the year. My advice to that person, and you guys will correct me if this is bad advice, and then I'll just edit it out so no one will know what my bad advice is. But my advice to people is do a rough calculation of what your taxes are likely to be. So we're now in the year 2022. Obviously, you can't pull up the 2022 tax program because it doesn't exist,
right.
But you could pull up the 2021 one and type in, well, if my CPP is this, and if my paychecks are this, and if this is this, how much will I owe? And then you'll know, oh, look at this. I am going to owe a couple of $1,000 next year. I should increase my withholdings now so that I don't get into that situation. Is that good advice or is that bad advice?
Yeah, no, I think that makes sense. I've had clients in the past where, it's very much, me who is explaining to them why they have a tax debt. Like it's overwhelming. It's something that's just not part of their understanding. Like Scott was saying. So, if things are stable, like what you're describing could be where there's a transition, but for a lot of pensioners, specifically, their income is very, very predictable. So sometimes it's as simple as looking at the tax return from last year and saying, is this going to be the same for this year? And you look at it and say, oh, you owed $3,000 last year, and divide that by 12, that's $250 a month.
And then you pay it and going forward.
And keep it simple. I mean, so if you're going to make, the reason we're talking about this is it's people at risk. They don't have the money necessarily to pay that tax debt. I mean, if somebody has enough cash flow coming in, they can pay it, but it's people at risk. So I always like to say, take 20% off. If you have less than 20% of taxes coming off your paycheck, you're in danger of owing something. So the higher your income, the more complicated you want to get to it. But if there's a simple situation, minimum 20%. Yeah,
and you made the comment, it's changes that get people into trouble. If you've been working at the same job for 20 years, well, you pretty much know what's going to happen. But it's when things change. And guess what? The last couple of years, tons of changes, and that's what got people into trouble. So, okay, now the title of the show was something like, when will CRA ramp up collections? So I guess we're 11 minutes into it. We should probably get to
I don't think we've asked that.
No, we haven't. So let me, I guess, preface that by saying when the lockdown started in March of 2020, CRA significantly cut back on collection activities. So prior to that, we had clients coming in here all the time. Hey, I got this letter from CRA. My boss got this letter. They're phoning. They're doing this. They're doing that.
My bank account is frozen.
My bank account is frozen. I got a lien on my house, whatever. Everything just, boom, stopped. So why did it stop so rapidly? Either one of you jump in. Tell me the answer.
I think CRA, or the Canada Revenue Agency, struggled like a lot of businesses where they were deployed from home, so deployed to home. So all of a sudden, a government-run facility can't easily take cell phone calls, can't just do things. They had secured lines before. So I think there was that initial, how do we do this from our home offices? Right. Like it just wasn't an easy
basic
thing.
Logistics.
Correct. Logistics, I think, was the very first part, and then.
Yeah, so I think we have some feedback that because the rollout of the COVID benefits were so overwhelming, and I mean, in hindsight, wasn't handled very well, but there's a lot of CRA staff that was redeployed to speak to the public about that kind of stuff, right? So they just had to kind of triage the situation, and collections was less of a priority.
Yeah, and most of the CRA people I knew, the employees, they all got deployed to work on that COVID emergency benefits.
Yeah, and just to give people an idea of the scope of this, in 2020, 9 million Canadians got CERB. That's a significant portion of the working age population.
Right,
so it's a massive number. And a lot of those people, the rules were not particularly clear. They kind of were evolving and changing. So do I qualify? Do I not? Did I fill it out right? Do I fill it out on CRA and Service Canada's site? Why didn't I get my money? So they're calling in. You got to have a whole lot of people on the other end of the phone to answer. That's what you're talking about. They were all redeployed to manning those phone lines and therefore couldn't be doing the regular collection activity. So okay, so they were manning the CERB lines. What else? They were working from home. What else?
There was also the human element. How do you pay them emergency benefits and then call them to collect on a debt that they have with you? Like it became a little bit of a human element to it. Like how can they force collections against people who are in a massive pandemic for the first time in our lifetime ever, where it just...
I say don't roll your eyes too badly, Doug, but I think there was some common sense humanity being displayed there at some level of management at CRA.
I didn't roll my eyes. Okay. Not very much.
I saw you were focused really hard. I know you were tempted.
Well, and look, I see both sides of it. CRA was thrown into a situation where, hey, guess what? There's a whole bunch of people who need these benefits, and we've spent 2 weeks figuring out how to do it. Go ahead and implement it. So obviously that's fraught with peril. And if you're going to tell people you have to stay home and you can't work, you have to give them money. You can't do one without the other. So I understand how we got into that situation. So Okay, were there any other reasons then why collection activity stopped?
Yeah, the CRA, the Canada Revenue Agency system, is very paper driven. So you won't get collection emails from CRA. You get your notice of assessment. You can log into their system to your My CRA account to see it. They mail you your notice of assessment if you want. They mail you collection notices. They send stuff to you. With them not working in the office, it's hard to have mail sent to you. It's hard to send a mail of a requirement to pay notice or collection notices or things like that. So the whole system of sending people, other than the initial notice to say you owe money, all those little reminders, a statement of accounts, just stop going out.
Yeah, it's a paper-based system. And even today, we are still receiving things like proof of claims that are pieces of paper. Yeah. In order to garnish someone's wages, they have to send, what's the word?
Requirement to pay.
A requirement to pay notice to the person's employer. They can't send that by email. The employer, well, number one, they don't have your employer's email address, but even if they did, the employer wouldn't know that it was real. So they have to send a piece of paper, kind of hard to do if you're working from home.
And just to show an example of that, I have an 11 o'clock call with a person from CRA today so she can cast her vote in a proposal, because when I talked to her last week, she couldn't get the office to print the stuff and mail it to us in time because her print day is on Thursday. She's working from home, just physically could not get that to us, so we have to do it by phone today.
Explain to me what you mean by print days.
Well, so according to the CRA representative I was talking to, she requests things to be printed in the office because there's staff in the office on Thursdays for them to hit print and hopefully get it mailed or faxed out. So she's working from home, can't do it from home, of course, because she is a government, and I get that part of it. But her day to print is Thursday, that hopefully somebody's in the office that would execute that for her.
Yeah, and this is, I guess, the difference between CRA and a lot of other businesses. We here at Hoyes Michaelis are back in our Kitchener office. We're on the main floor here today because we couldn't all fit in the normal podcast studio. But we have employees back. All of our employees are back at least 3 days a week. So there's a lot of people here every day. And so if we need to print something, it's not that hard. And we've got technology. I can go on my computer and I can, even if I'm at home, I can print something to the photocopier here. Someone can pick it up.
But also we've been able to evolve in ways where we're minimizing the amount of printing, whereas CRA, partly because of technology, partly because of privacy concerns, they're kind of stuck in a mentality that is a little bit outdated.
But it does explain why collections slowed down. Like if you are a collector at CRA, how many of those people, how many collections of your accounts that you are assigned to can you get through to in a day? With all this now barriers they got to get through. Where in the old days they could have got 50 letters out in a day. Are they getting 5 out a day now? So you can see where this is compounded for them. Plus, our example was 40% of our clients now have a tax debt. So we also had an increase in potentially people having tax debts. So it's just a bigger number that's being handled at a much slower pace.
And the technology is that much harder. So did we cover all the reasons why they've cut back on collection activity?
I think so.
I mean, I guess the other one was, and you kind of alluded to this a bit, no one had any money to pay anyways.
Right.
So it wasn't just the human aspect of, I'm not going to call you. It's like, okay, well, you're on CERB. You don't have enough money. Right. You're clearly not going to be able to pay your taxes. So there's really no point in calling them. Okay, so we still haven't answered the question, but we'll get to it. So
what was the question?
The question was, when is CRA going to ramp up collections?
Right,
and again, we've alluded to it, but we'll get to it. We're going to have to put timestamps in the episode so people can skip ahead the answer, I guess, here. So Ian, back in your old life, before we rescued you, as I tell the story here at Hoyes Michaelis.
Thank you, Doug.
You worked at this place called CRA. Mm-hmm. So tell us from the other side of the desk what special powers CRA has. And you already mentioned this RTP thing, so why don't you start with that?
Yeah, so the requirement to pay, it's a formal demand notice that basically means the recipient is required to pay to the Canada Revenue Agency the specified amount in certain percentages. And so that would be sent to an employer, so then becomes a requirement to pay on a person's wages. Sometimes we'll call it a garnishee or a garnishment, which isn't quite technically the term, but I mean, it's the same effect. Your bank can receive the requirement to pay notice where your account is frozen. If you work as a contractor and they know which company for whom you work, that RTP can be sent to the contractor. So you've worked hard doing your tile installation, but instead of paying you, the government pays, or rather the contractor pays CRA instead because they are required to. So that's the most common example, the requirement to pay. The other scenario that you don't see too often because it's pretty drastic, but the Canada Revenue Agency also has the right to slap a lien on your property, your physical property. So that it's a very dramatic effect that they only use in extreme situations when all other options are exhausted, basically.
Yeah, and a lot of our clients don't own a house,
Right,
so
right.
there's
I was going to say, so that's something that we've never really seen a lot of in the past, but it does happen. But I would say in the last couple of years, it's been even less frequent because CRA has not been aggressive in their collections, and in general in Ontario, property values have gone up significantly. So people have been able to leverage that increased equity to deal with the situation without getting to the point of whether it's CRA or a different creditor really enforcing things aggressively like that.
Right. If you owe CRA 10 grand, but your house went up by 100 grand, well, you get a second mortgage, pay them off, and it's
exactly. So it never got. So even if CRA was ready to use that power, it wouldn't get to that point.
So we've talked about why CRA collection activity dropped, and the answer was, pandemic, working from home. The economy started to open up in the summer of 2021. We're now in the spring of 2022. And as we are recording this, which is the second week of April, the first week of April, I don't know where we are today, you can actually go to a restaurant and you don't have to show your papers or wear a mask. If people are watching this in the future, we may be back in lockdowns. I don't know. So why then have collection activities not ramped up? I assume the answer is, they are. I guess there's two questions there. Have collection activities ramped up? And if not, is it because of all the reasons we just talked about? They're still working from home, still can't be doing it?
They've started. I think back to 2019, it was uncommon to not receive a call a day from somebody that had their bank account frozen, CRA garnishing or requiring to pay against their paycheck, taking a part of their paychecks. They even can take pensions. I mean, they can actually, take a chunk of somebody's pension. So it was very common for that to happen. Then everything stopped in 2020. We've kind of moved forward now in 2022. I am now starting to see people who are receiving letters saying, you now owe us, you got 30 days to respond to us or we will take legal action. So they are now starting to send out those notices to get people's attention, where at one time, that was more readily available. Now it's coming. I'm seeing it first on bigger dollars accounts, people that had a larger amount, more self-employed people, but it's coming. I'm starting to hear more rumblings. I mean, definitely a lot of notice of debts are coming out. I mean, a notice of debt is where people have received this CERB or this COVID emergency benefits in 2020. They're now receiving collection notices on those, a notice of debt. Those are just notices coming out. I don't think there's heavily aggressive calls yet, but it's coming. I mean, it's definitely the fire started. It's not heavily burning yet, but it's definitely started.
Yeah.
Now, just before we go on, you mentioned the word pension there. So you said CRA can take a pension.
They can take it. They can have a requirement to pay against somebody's pension. Correct.
Now you're talking about CPP.
Yep. It's very rare that it happens, but it does happen.
What about like an owner's pension or something like that?
Yep, for sure. I've definitely seen somebody have their owner's pension. Definitely have a few clients in the past. Haven't, once again, not in the last couple of years. Things changed over the last couple of years. During the pandemic as well, CRA for student loans will offset people's student loan or the refunds and pass it on to student loans if somebody owes student loans. They stopped all that. So during the pandemic, they stopped a lot of their collections. Not only did they stop it, they reversed the ones that they had in play to let people have their money back again. So their powers are strong. They backed away, but I think they're coming back.
Well, and this is really like we've teased a couple times here. So this is the original premise, the original question. When is CRA going to ramp things up? And yeah, I agree with what you guys are saying that. As things are kind of getting back to normal, we're kind of seeing CRA getting back to normal. They still have logistical issues, but I know we had a discussion last week amongst our trustees where there have been a handful of us who have actually seen clients like now where their employers receiving the requirement to pay notices that we were talking about a minute ago. Like that's a very real thing.
Yep, and I actually had one last week, and it kind of shocked me because, I haven't seen one of these for a long time.
Yeah, I had one as well where the woman to whom I was speaking was, there's reasons why she was kind of on the fence on whether or not she was going to file with us, just wasn't sure if it was really that bad. But then she called me in a panic last week and said, oh my goodness, Ian, like now there's going to be, CRA is going to be taking a part of my paycheck. And I kind of tried to calm her down. And just knowing what we've been talking about, how they haven't been doing stuff like that, I wanted her to send me the notice just to make sure that, it really was that. And sure enough, it was a requirement to pay. And I have not seen something like that in, I don't know, a couple of years.
And this was a piece of paper.
Right, yes.
Because I remember asking you that. Well, did they fax it? No, this was an actual piece of paper that CRA sent to her employer.
So they must have been able to coordinate print day for this particular.
Yeah, that's right.
So not only was it sent to her, it was sent from Newfoundland. It was a collection office in the Newfoundland location of CRA for that person. So once again, it's Canadian-wide collections now. So they've also done a lot of more decentralization. It's now different locations that they have and that kind of stuff. So
yeah, and that's an important point, because even though maybe Ontario still is in some kind of quasi lockdowns and the CRA representatives aren't in the office much, well, if they're in the office more on the East Coast or the West Coast or something, then they can still be sending those same letters. So what you're seeing now is a gradual ramping up of collection activity.
Yeah, signs definitely appear to be there for sure.
And I also think sometimes people have been a little bit more proactive as well. So maybe if people are proactive in dealing with debts, they won't get as heavily collections, but there's still that uncertainty that people have whether a debt with the government can be taken care of through a program that we deal with. There's a lot of people, until they get that notice from the government that's hounding them, that's about to take legal action against them or starting to garnish their wages, where they would call us and say, can you guys really help with this? So there's a lot of that's one area that's
uncertainty, indecision. Yeah, for sure.
Yeah, now people are starting to see that. So what I'm seeing is that exactly what you guys are seeing. We had the CERB in 2020 that either there was no tax withholdings or they have to pay it back. Now people are filing their 2021 taxes. A lot of people received CRB, the Canada Response Benefit, which was part of EI. There was 10% tax withholdings, but again, if your marginal tax rate is higher than that, you end up owing. And if your total taxable income was over a certain amount, I think it was 38,000 or something, then there's a clawback. You might end up having to pay back a significant chunk of it. People are only finding that out now as they file their 2021 taxes. So there's now 2 years worth of tax debts for a lot of people, plus 2 years of the pandemic, drawing on their RSPs, all those kinds of things. So the problem is going to get a lot bigger, I think, this summer as that's all done. So what I see happening is CRA going after those people, but then also, like you said earlier, the big stuff, people with higher tax debts, people who are self-employed, business debts, HST, that sort of thing is all coming to fruition.
And on that note, I think all of us have experienced very good conversations with CRA representatives in a proposal we've done a proposal for somebody with tax debts. Their life changed because of the pandemic. They're now trying to make an offer to them. CRA is being very reasonable in their voting, in their acceptance for an amount on a proposal. So I think I've found that there's been a less hammer from them on wanting more that they might have had a few years ago, where they're being very reasonable.
Well, so let's finish then with the practical advice. So the first one, what you just said, is that if you owe tax debts, they are able to be included in a bankruptcy or a consumer proposal. And today, as we record this, April of 2022, CRA is being reasonable. And I think it's because they've got 9 million people who got CERB. There's a huge number of people who owe taxes. And there's no way they can possibly have conversations with 9 million people. So if a proposal is presented to them that is reasonable, they're going, you know what? Let's take the deal, and that way that one's dealt with, we can go on to somebody else. So I think absolutely reaching out, I mean, this is a commercial for us, but hey, the only people who are able to get you a deal on your tax debt. CRA is not, and you can correct me on this one if I'm wrong, Ian, but CRA cannot just reduce the principal owing. They might be able to say, okay, fine, we'll waive some penalties, we'll waive some interest. But the law says if you owe the taxes, you got to pay it. The only exception to that would be in a bankruptcy or a consumer proposal where they can then accept less than the full amount owing.
Right, because there's another piece of federal law. You know, we got the Bankruptcy and Insolvency Act, which in that situation kind of trumps the Income Tax Act.
That's right, and that's why it's possible. So, okay, practical advice is, you got tax debt, reach out to us. What other practical advice can we end with?
Well, I think the key is don't ignore the situation, right? Because in general, maybe it's not as bad. Maybe you are able to work with CRA. Scott was getting at this a moment ago. I mean, if you have a situation that you might be able to work out, it's better to talk to them, and hopefully you can work out a payment arrangement. But don't ignore it, because if you've ignored them for a long time, they're less likely to cooperate with you. But then also, because we have seen, kind of the return to, the start of the return to normal, if it's out there, they're going to start contacting you at some point. So let's be proactive and try to work on a plan for you.
I agree. If you pick up the phone and call them and say, hey, look, I can afford to send you a couple $100 a month, well, they will probably be...
Well, they're not going to freeze your bank account
Right.
if you're giving them something.
Yeah, because otherwise, how can you give them something? So now, if you owe $50,000, $200 a month probably isn't going to cut it. But yes, I agree. Don't ignore it. Reach out to them. What other practical advice have you got?
And most people that have tax debts also have other debts. So when you're trying to come up with a plan, don't offer so much to CRA that now your other debts are suffering as well. You actually got to look at the whole picture. So if you have tax debts, look at everything all together. Don't look at just one by itself. You got to be able to reasonably make an effort to deal with all debts, including the tax debt. So look
I
at
agree.
the big picture.
We're getting, our clients are getting increased calls from CRA, but guess what? They're getting increased calls from the banks and the credit card companies and everything else as well.
There's pressure.
So you're right. Taking all your paycheck and giving it to CRA now just means that I can't give anything to anyone else. You got to look at the whole picture then. So final question for you then, Ian. I know I can't pay. Should I still file my taxes?
Yes. I mean, and that's not filing your taxes is quite often like a normal kind of defensive reaction to the situation. But not filing the taxes to avoid owing money, it's just postponing the inevitable. So maybe it buys you a little bit of time, but also it's a sign of cooperation where if you get it filed, then maybe you can engage in a conversation on a payment plan for them. There's lots of other benefits that you might receive because of filing your taxes, whether it's the Canada Child Benefit, the Ontario Trilling Benefit, the HST credit comes every 3 months. So things like that aren't going to solve a $50,000 problem, but they might solve a problem that's only a couple $1,000s.
And late filing means 5% automatic late filing.
Right. There's
if
interest
you owe
and
money.
penalties. Right? It's going to make it worse.
The other part is CRA does have a group of collections on non-filers. So they actually are aggressive at times for people who have not filed. So you're now jumping yourself into another group of collections. So they're not collecting on your tax debt. They're collecting on you not doing your taxes.
Right. And they're not going to engage in any kind of conversation either with you or even with us if the returns aren't filed, because they want to know. They want to know how bad is it before they enter into any kind of discussion.
Yeah, so get your taxes filed. And I agree.
Correct.
If you're getting hit with this 5% non-filing penalty, but then you're also getting hit with the interest, and they're not going to be as amenable to talking. Whereas if the taxes are filed, you can at least call them up and say, look, I filed the taxes. Let's see if we can work out a plan. And Ian, you're right. When we file a consumer proposal, the taxes have to be filed, because otherwise, how does CRA know how much you owe? How can they vote on a proposal if they don't even know what the debt is? So I think that's critically important. So, okay. I mean, I think we've given a whole lot of practical advice there. Anything else that we've missed? I guess my
we nailed it. We nailed it.
We got it perfectly. Well, and we made the comment earlier that I believe, and you guys use the term proactive, that's really important with all kinds of debts, certainly with CRA. You want to be looking ahead. Okay, how much am I going to owe next year? Well, maybe I can make an RSP contribution. Maybe I got a second job. Maybe my pension kicks in. Do the math. Figure out what you're likely to owe next year. It's a lot easier, rather than trying to give them $1,200 next year, to give them $100 a month, either by having taxes withheld at source of a greater amount, or every month set them up as an online bill payment and send them $100. It's better to deal with it month by month than dealing with it at the end. So there you go. The answer to the question, when will CRA ramp up collections, is they've already started. I don't think they're anywhere near back to where it was in 2019, but I would not be surprised if throughout the rest of the spring, the summer, and certainly into the fall, when everyone's filed their 2021 taxes and they know what the liability is, that's when I think we are going to be having tons and tons of people reaching out to us to say, hey, I got these tax liabilities. So be proactive, deal with it now, or at least make a plan to deal with it now, and you're going to be in much better shape. If you can't, well, obviously, that's why we're here at Hoyes Michaelis. Scott Schaefer, Ian Martin, thanks very much for being here. That is our show for today. Until next week, thanks for listening. I'm Doug Hoyes, and if you're watching this on YouTube, hit all those buttons at the bottom of the screen. There's a bell and a thing and a subscribe. Do all that. You'll get the podcast every week. Otherwise, if you're listening on an audio platform like Spotify or Apple Podcasts, please subscribe so you get them every week. Until next week, thanks for listening. For Scott Schaefer and Ian Martin, I'm Doug Hoyes. That was Debt Free in 30.